gaining ratio and the treatment of goodwill on retirement. The next part of the chapter is about the treatment of the revaluation. Now, what do you mean by revaluation? Revaluation simply means the change in the value of assets and liabilities due to the change of the partnership. It can happen in case of admission, which we have already done in the previous chapter. Now we will see what will be the impact in the case of retirement. Remember one thing, the revaluation account will not change, it will remain the same thing. That means we will have to take two basic rules which is to be taken while making the revaluation account. Revaluation account comprises of the debit side and the credit side, and the debit side includes the reduction in the value of assets and the increase in the value of liabilities, and the opposite credit side actually has the increase in the value of assets and reduction in the value of liabilities. With that in the mind, we'll start with the revaluation sums, which in this book, D.K. Goodwill, starts from 16a. Now, let us read the question. This is question number 16a of D.K. Goodwill. And you can see that there are three partners, X, Y, and Z, in the firm, sharing the profits and losses equally. The balance sheet is given below, you can see, and the balance sheet is on 31st March 2020. You can see the asset side, which has cash in hand and bank, which is 86,000, debtors 2 lakh, stock 1 lakh, investment at cost is given as 50,000, property, freehold property is given as 4 lakh, trademark is given as 20,000, goodwill is 33,000, and the total comes to 8,89,000. As far as the liabilities is concerned, we have the creditors, general reserve, and provident fund, with 1,09,000, 60,000 and 20,000 respectively. The capital of X, Y and Z is 3 lakh, 2 lakh and 2 lakh respectively. So the balance sheet tallies at 8,89,000. Apart from that, we have also been told that Z has retired on 1st April 2020 and the following adjustments were made. First one, the freehold property was valued at 5,80,000. So you can see the value of property has gone up by 1,80,000. Investment has valued at 47,000, so it has gone down by 3,000. Stock is valued at 94,000, so it has gone down by 6,000. A provision of 5% is made for doubtful debts, and if you remember, the debtors was valued at 2 lakh, and 5% of 2 lakh becomes 10,000. Trademarks are useless, so 20,000 is reduced. An item of 12,000 is included in creditors, is not likely to be claimed, so the creditors goes down by 12,000. Goodwill will be valued at 1 year's purchase of the average profit of the past 3 years' profit, and the profit of the last 3 years, that is 2018, 2019 and 2020, is given as 1,20,000, 1 lakh and 95,000 respectively. And we are asked to pass the journal entries, give the capital account and the balance sheet of the remaining partner. So we'll first start the solving of the sum, but first we'll calculate the goodwill and then we'll find the average goodwill and we'll see how much money has to be paid to the retiring partner. After that, since the question has asked us to pass the journal entries, we'll do the journal entries and we will not make the revaluation account, because the question has not asked us to make the revaluation account. The question has actually asked us to make the journal entries, which we will do that. And after the preparation of the journal entries, we'll prepare the capital account, and followingly we'll prepare the balance sheet of the firm, which will have X and Y as partners and Z has retired. Here nothing has been said about the payment to Z, so the amount of money which is due to Z will remain as a loan to the firm. This is sum number 16a, and whenever we are doing a sum, first and foremost we should consider the internal entries and the goodwill if it is. If you read the question very carefully, which I have already done, you can see that there are three partners, X, Y and Z, who are equal partners, and one of the partners, that is Z, has retired. So therefore the gaining ratio between the remaining partners also remain equal, because nothing has been said about the new profit sharing ratio. First things first, here we will calculate the goodwill, which is given 3 years of profits average. You can see the 3 years profit I have written down at the top, 1,20,000, 1,95,000 respectively, and we'll add that and divide it by 3 to find the average. So if we add up 1,20,000 plus 1 lakh plus 95,000 and divided by 3, we are getting a total of 3,15,000 by 3, that is 1,05,000. So over here, the goodwill of the firm is 1,05,000. If the goodwill of the firm is 1,05,000, what will be Z share? Z share will be 1,05,000 divided by 3, because all the 3 partners are equal partners. So you can see that Z's share of goodwill comes to 35,000. Now you know what is the journal entry we do in case of retirement of the partner. That is, the gaining partner's capital account will be debited and the retiring partner's capital account will be credited. Over here you can see that X and Y are the gaining partners because they continue the business after Z's retirement also, and therefore 35,000 will be distributed equally among them. That means 17,500 to both the partners. So we'll do the journal entry over here. That is, X is capital account. X is capital account debit. Y is capital account debit to the retiring partner Z's capital account. So this is the journal entry, the first journal entry for the treatment of goodwill. You can see over here the amount will be 17,500, 17,500 and 35,000. I hope it's very clear why it will be 17,500 each partner, because 35,000 is the goodwill of Z, which will be distributed equally among X and Y, because they are the gaining partners. After doing this first journal entry, we'll move on to this question, because this question asks us to prepare the journal entries. They have not asked us to prepare the revaluation account. They have asked us to prepare the journal entries. They have asked us to prepare the capital account and the balance sheet after retirement. The process will be absolutely same as we have done in case of admission. Is it very clear? In the case of admission, if you remember, we have also passed journal entries. We have also prepared the capital account and the balance sheet. The only small difference which will happen in the capital account, which I will show you when I prepare the capital account. So first, let us concentrate on the journal entries. We will start with the internal journal entries. Over here, there are 2 internal journal entries. If you remember, first internal journal entry is for the general reserve, which is 60,000. And the second internal journal entry is for the goodwill, which is there in the asset side of the balance sheet as 33,000. Don't confuse this goodwill with that goodwill which is given in the text, given in the question. 33,000, which is there in the asset side of the goodwill, which is the goodwill which is already there, which has to be taken away by all the 3 partners in the ratio 1:1:1. We will see that in a moment when we start with the journal entries. After doing the journal entry for the goodwill, which we have already done, now we'll move on to the other journal entries, because the question has asked us to pass the journal entries and prepare the capital account and the balance sheet. Now first we'll concentrate on 2 internal journal entries. If you have read the question and if you remember that the general reserve was 60,000 given in the asset side of the liability side of the balance sheet, there is also a provident fund given in the liability side of the balance sheet, and provident fund should not be distributed because it does not belong to the partners, it belongs to the firm. And in the asset side, there is a goodwill 33,000 which is already there. So the first 2 journal entries which we'll concentrate on is the general reserve and the goodwill. So these are the 2 internal journal entries which we'll concentrate now. So the first journal entry which we'll do, first and foremost, please understand the format: date, particulars, ledger folio, debit and credit. And if you remember, Z has retired on 1st of April 2020. The journal entries will be made on 1st April 2020, and the first journal entry will be general reserve account debit to X's capital account, to Y's capital account, to Z's capital account. This is the first journal entry which we need to understand and do it. And if you remember, the general reserve given in the question is 60,000 and the profit sharing ratio is equal. Therefore, 20,000 to X, 20,000 to Y and 20,000 to Z. If you remember, Z has retired. I hope you know the narration being goodwill written off among the partners. Now, next journal entry which we'll have is the journal entry for the goodwill which appears in the book as 33,000, and if 33,000 is divided among 3 partners, it will be 11,000 for all. So the journal entry will be excess capital account debit, excess capital account debit, Y's capital account debit, Z's capital account debit to goodwill. And what is the amount of goodwill? It is 33,000. And therefore, each partner will be debited with 11,000 because the PSR is equal. So you can see over here, X's capital account 11,000, Y's capital account 11,000, Z's capital account 11,000 to goodwill 33,000. These are the two internal entries which we will do, and after that we will start with the external entries which are based on the revaluation. If you see very carefully, there is a revaluation of assets and liabilities both, and we will do the journal entries for revaluations of assets and liabilities after we have done these entries. Now let us pass the journal entries which has been asked for the revaluation account. I have just noted down the following revaluations as it is given in the question. If you see, the first revaluation which is given, the freehold property which is given in the balance sheet as 4 lakh has been revalued to 5,80,000. Therefore, there is an increase of 1,80,000. And we know that if the asset increases, it will be posted in the credit side of the revaluation account. But over here, they have not asked to pass the make the revaluation account. They have asked us to pass the journal entries, which we will do it. Next, you can see investment, which was 50,000, has gone down to 47,000. Therefore, there is a reduction of 3,000. Stock, that is the same adjustment which has been given. Stock has gone down to 94,000. That has been gone down to 6,000. Okay, so we'll concentrate on the first and the second journal entries. Then we'll go on to the other journal entries. So first journal entry over here is very important. There is freehold property which has been revalued to 5,80,000. That means increase of 1,80,000. So the first journal entry is for the revaluation account is freehold property account debit to revaluation account. You can see over here the value has increased to 5,80,000. That means it is an increase of 1,80,000. This is the first journal entry which we have done. Freehold property account debit to revaluation account of 1,80,000, 1,80,000. Now the second, this has been done. The second and the third has been given together, and you can see the investment has gone down from 50,000 to 47,000. So there is a decrease of 3,000, and stock has gone down from 1 lakh to 94,000. So there is a decrease of 6,000. These are the assets which are going down. Therefore, the journal entry over here will be revaluation account debit to investment to stock. So what is the value? We have already shown it. It is 3,000 and it is 6,000 over here. That makes it 9,000. So revaluation account 9,000 to investment 3,000 to stock 6,000. What will be the narration over here? Being the value of asset decreased. I hope you know the narration for the first one, being the value of asset increased, or you can also write being the freehold property value increased. That is absolutely up to you. Now the next thing we can see, there is a 5% provision on debtors, and 2 lakh, if you calculate 5% of 2 lakh, it becomes 10,000. So next journal entry will be revaluation account debit to debtors, and the value over here, please see very carefully, 10,000, 10,000. Now if you see, we have also been given over here, trademark has become valueless and creditors of 12,000 is not likely to arise. Now creditors over here is not likely to arise over here. That is an entry which we'll do later, but let us concentrate on the trademarks which has become valueless. If the trademark has become valueless, the balance sheet has a value of trademark as 20,000 and it has become valueless. That means it has gone down by 20,000. So the next journal entry is revaluation account debit to trademark. If you see very carefully, The question has a trademark of 20,000 and it has become valueless. That means the value has become 0. That means the value has gone down by 20,000. So we are doing this entry over here. So these are the basic journal entries which are given to us. Apart from there will be one more journal entry which will be preparing for creditors, and then we'll find out the profit or loss on revaluation by the working in the journal. See very carefully the journals which I have done. I just do it very fast. First one, freehold property increased by 1,80,000. Second, you can see investment and stock both has reduced by 3,000 and 6,000 respectively. Third, you can see debtors. There is a provision for doubtful debts of 5% created on 2 lakh. So 5% of 2 lakh will be 10,000, and the value of trademark has become valueless. The original value was 20,000 and it has become valueless. Therefore, revaluation account debit to trademark 20,000. So we are left with one more journal entry. That is the journal entry for creditors, which I'll do. And next one is the basically showing the profit or loss on revaluation. Now we are left with the last journal entry, which is the revaluation journal entry, and after that we'll find out the result of revaluation. So first let us move on to the journal entry for the creditors, and you can see over here the creditors of 12,000 is not likely to arise. So there is a decrease in the value of creditors, and if you remember, if there is a decrease in the value of liability, it will go to the credit side of the revaluation account. So what will be the journal for that? The journal entry will be creditors account debit to revaluation 12,000. So we are now doing creditors account debit to revaluation, and the value of it, see very carefully, is 12,000. Now, after this, let us find out the profit or loss on revaluation. Now, if you remember, here, if you see very carefully, the value of fixed asset had gone up by 1,80,000. So that was the item which was there in the credit side of the revaluation. And the last item, the value of creditors, is 12,000. These are the two items which are there in the credit side of the revaluation account. And apart from that, all other items were in the debit side. If you remember the journal entries which we have done, okay, we have done the journal entries for investment and stock, where you can see there is a reduction of 3,000 and 6,000 respectively. There is a provision for doubtful debt for 10,000, and the trademarks had become valueless. So over here you can see 3,000, 6,000, 10,000 and 20,000. So if you add that total, it basically gives you 39,000. Okay, so if we have 1,92,000, okay, we have the concept of 1,92,000. I hope you have understood that. And from that, we are subtracting the value of 39,000. We are actually getting a profit. Over here, we are actually getting a profit, and the profit is 1,53,000. Now the profit is coming to 1,53,000. This profit is obviously divided in the ratio 1:1:1, because that is the PSR which has been given to us. And the last journal entry for the revaluation will be revaluation account debit to excess capital account to wise capital account to Z's capital account, and you can see 1,53,000 divided by 3 gives you 51,000 for each partner. So the journal entry is 1,53,000 and 51,000 to partner 1, 51,000 to partner 2, that is Y, and 51,000 to the retiring partner, that is Z. So this is the last journal entry which needs to be done. So if I sum up, what are the journal entries which has been done? We have done the journal entry for the goodwill. We have done the journal entry, 2 internal journal entries for general reserve and goodwill, and we have done all these journal entries for revaluation. The last journal entry which we have got is the profit on revaluation, 1,53,000. After this, what are the things which we are asked to make? We are asked to make the capital account, and we are also asked to make the balance sheet of the firm, which we will very shortly do. After preparing the journal entries and seeing the informations in the question, we will now prepare the capital account. As you know, the format of the capital account should have a date column, but in most of the books the date column has been done away with. But it is important that you understand that date column is important. So I have drawn the date column over here, and the format remains same, that is date, particulars, X, Y and Z over here in the debit side and the credit side. Now the question has given us the capital balance of the three partners as 3 lakh, 2 lakh and 2 lakh respectively. So that will be the first entry which will start in the credit side. So the first entry in the credit side will be buy balance brought down. First partner X, that is 3 lakh. Second partner is Y, which is 2 lakh. And the third partner is Z, which is the retiring partner, is also 2 lakh. Now, if you remember, the first journal entry which we had done the journal entry for the treatment of goodwill, and if you remember, X and Y were the gaining partners and they had given the goodwill to Z. Both of them had actually given 17,500. So the next entry will be for the goodwill and the journal entry will be by X's capital account by Y's capital account, and both 17,500 because the goodwill was 35,000 and we have seen this entry over here by X's capital 17,500 by Y's capital 17,500. There will be a corresponding entry in the debit side and the entry will be to Z's capital and in X's account it will be 17,500 and in Y's account 17,500. I hope you remember the journal entry which we had done. After that, there are two internal entries. The first one is the general reserve and the second one is the goodwill. So we'll do the entry for general reserve by general reserve. And if you remember what was the general reserve given in the question, it was 60,000 which will be divided among all the three partners. We have already passed the journal entry for that, and that is 20,000, 20,000, 20,000 for each partner. So we are passing that entry over here, 20,000, 20,000 and 20,000. So this is the entry for the general reserve. Let us move on to the debit side where we have the entry for goodwill. And if you remember, the value of goodwill was 33,000, therefore 11,000, 11,000 and 11,000. So this is the entry which we have done for goodwill and that is the entry which we have done for general reserve. After that, we have done the revaluation account by preparing the journals and we have gone to the information in the last journal entry that there is a profit on revaluation of 1,53,000 which was divided by among the three partners as 51,000, 51,000, 51,000. For that we have to pass the journal entry. So the journal entry will be by revaluation profit, or you can also just write by revaluation, but I am writing revaluation profit so that you are very clear about it. And the amount was 51,000 to each partner. If you remember, the profit on revaluation had come to 1,53,000. After doing this entry, let us now see the small difference which will appear in the debit side of the capital account. This is the only difference which will appear in the capital account. That is, the difference is that whatever amount of money is pending to the retiring partner will be treated as a loan if he is not being paid. If the retiring partner will be paid, then will be entering as two bank. But here, Z is the retiring partner and he is not being paid. Therefore, the entry over here will be to Z's loan. Now, how will we calculate Z's loan? Very simple. We'll add up the credit side and with the credit side total we'll subtract 11,000 and we'll see what is the loan. So let's get started with the addition of the last partner, that is Z, and then we'll go for the other two partners. Okay, so please see very carefully. We have 2 lakh plus 35,000, that gives us 2,35,000 plus 20,000, that gives us 2,55,000. 2,55,000 plus 51,000 gives us a value of 3,06,000. So we have a total of 3,06,000 over here. So 3,06,000 over here. I hope you know that we follow the double entry bookkeeping system and therefore the debit side should always be equal to the credit side. And we have 3,06,000. So 3,06,000 minus 11,000. If we subtract that, how much are we getting? We are getting a balance of 2,95,000. So this 2,95,000 is not the balance anymore. It is a loan. because Z has retired and Z has not taken out the money from the firm, and therefore this 2,95,000 will be treated as a loan. So after that, let us find the balance of X and Y. And what will be the balance of X and Y? We'll just add the value of X. You can see 3 lakh plus 20,000 plus 51,000. That gives us 3,71,000 for X, and the total for Y is 2,71,000. I hope it's very clear. Very simple addition. 3 lakh plus 20,000 plus 51,000 and 2 lakh plus 20,000 plus 51,000. That gives us 3,71,000 and 2,71,000 respectively. Now, over here 3,71,000, over here 2,71,000. Let us subtract the figures which is given over here. 3,71,000 minus 11,000, that gives us a value of 3,60,000. 3,60,000 minus 17,500, that gives us a value of 3,42,500. I repeat again, we have over here to balance carried down, and we will have 3,42,500. I hope you are understanding this. 3,71,000 minus 11,000 has given us 3,60,000. 3,60,000 minus 17,500 has given us 3,42,500. Similarly, we have 2,71,000. 2,71,000 minus 11,000 gives us 2,60,000. 2,60,000 minus 17,500 is simple calculation, 2,42,500. Okay, so this is how we have arrived with the balance, that is 3,42,500 and 2,42,500. This is the balance of the two partners who are still continuing, and we will obviously carry forward the balance. So that is Y balance brought down, and it is 3,42,500 for X and 2,42,500 for Y. So after getting the balance in the capital account, the last thing which the question has asked us is to prepare the balance sheet. And if you remember that there were various revaluations which were done, which we will be taking into account when we prepare the balance sheet. Over here, since no money has been paid to the retiring partner, they will not affect the cash in hand and cash at bank balance, which is given in the question as 86,000. That will remain same, and there will be certain changes in the value of assets and liabilities, which we'll see when we'll prepare the balance sheet. So the last part of the question is the preparation of balance sheet. Remember, we have done the journal entries, we have done the capital account, and now we are moving on to the balance sheet. See at the top, balance sheet as at 1st of April 2020, that is the date of Z's retirement. And we'll start with the balances which we have. The cash in hand and cash at bank is given to us as 86,000. Always remember, it is always important to prepare the balance sheet the way it has been given in the question, because there is less chances of forgetting an item if you are following the way it is given in the question. Okay, it can be given in the order of provenance, it can be given in a mixed order, or it can be given in a liquidity, but it does not matter. The way it is given in the question should be done in that way, because you generally chances of forgetting is less. So we first start with cash in hand and cash at bank, and if you remember very carefully, the figure is 86,000. This will not change. Next one, we have debtors. And what is the value of debtors? The value of debtors is 2 lakh, and if you remember, there was an adjustment. The adjustment was there was a provision for doubtful debt of 5%. So debtors, inner column 2 lakh less provision for doubtful debt 10,000, outer column 1,90,000. This is the second entry. Third entry which is given in the question is stock. Stock, the value is 1 lakh, and there was a reduction of 6,000 less decrease 6,000, 94,000 outer column. Never write depreciation for stock. Always use the word decrease or increase in case of stock. Next one, we have investment. And if you remember, what was the value of investment? The value of investment was given in the question as 50,000, and it went down to 47,000. Therefore, there was a decrease of 3,000. So investment 50,000, less decrease again 3,000, outer column 47,000. After that, we have items called freehold property, and we also have a trademark. Freehold property, if you remember, it has increased from 4 lakh to 5 lakh 80,000. So we have freehold property. Value was 4 lakh. Add appreciation. The value is 1,80,000. So the balance sheet value at the outer column is 5,80,000. And next we have patents. The value was given as 20,000, and there is a decrease of the entire 20,000 because patents became valueless. Repeat again, patent becomes valueless. So you can see patent 20,000 and let's decrease the value over here 20,000. Outer column is nothing or 0. Okay, so now we have completed with the asset side of the balance sheet. Let us move on to the liability side of the balance sheet, and we start with the value given to us is creditors. The value is given to us as 1,08,000, and there is an adjustment of 12,000. Let's decrease 12,000. The outer column which we get over here is 97,000. 1,09,000 minus 12,000 gives us 98,000. There is a Provident Fund in this question, which I told you will not be distributed. So the next thing over here is Provident Fund, because it deals with the workers of the organization, and the Provident Fund is given in the question. If you remember very carefully, was 20,000. We'll write 20,000 over here, provision or Provident Fund. After that, the retiring partner Z has actually got a balance of 2,95,000, which will be treated as Z's loan. So the next thing which we'll write over here is Z's loan, and the value was 2,95,000. If you remember, we had prepared the capital account and we are getting a balance of 2,95,000 for the retiring partner, which will be treated as a loan, which I have just now written over there, Z's loan, 2,95,000. And we have two remaining partners. So their capital accounts, that is X and Y. If you remember the capital accounts of X and Y's balance, we had 3,42,500 and 2,42,500. So 3,42,500 and 2,42,500. So we need to add these two figures, and if you add these figures, we get a total of 5,85,000. 5,85,000 we get. So this is what the total is. Now let us move on to see if the balance sheet tallies. Now let us move on to the asset side. 86,000 plus 1,90,000 plus 94,000. So 86,000 plus 94,000 gives us a figure of 1,80,000. 1,80,000 plus 1,90,000 gives us 3,70,000. 3,70,000 plus 47,000 gives us 3 lakhs. Now plus 5,80,000, the total which we are getting somewhere around 9,97,000. The total is coming to 9,97,000. So now let us see over here. 5,85,000 plus 2,95,000 gives us a value of over here 8,80,000. 8,80,000 plus 20,000 is 9,90,000. The total is over here 9,97,000. So the balance sheet of the firm after the retirement of Z tallies at 9,97,000. So this concludes sum number 16A of DK Goyal. We'll come up with more sums very soon.